All right, let's take a look at the S&P 500. These are the futures, and we're going to look at the weekly chart, the daily chart, and the trade of the day. And I'll talk about copper again just briefly. Today is Friday. Let's see, Friday. It's July 28th, 2023. Okay, and it's got a pretty decent candlestick going on here for the whole week. 80, we'll call it 81 in range. So pretty decent candlestick. Came right up and basically touched this 46.31 resistance. Okay, I know we have a cycle low here for August 13th. There's also one, we'll look at that when we get to the daily. There's one in the daily I think that might be a little bit better than this cycle low, but we want to keep an eye on that. Of course, I've been talking about this divergence, that's been showing up here. And, right now the S&P looks very, very flat here, just kind of tracking sideways. And the MACD went up again today, back up here to 138. This is very elevated. It's amazing how elevated this MACD is. Okay. And for those that want to know, up there is the 4808 all-time high right here. Can we get above this? Yeah, we could. We could still get above this. It could still come up into this area. If it gets up into this area over the next week or two or three, whatever, that can really change quite a few things in the market. I talked about this before, blood in the water, so to speak. This could really take off if it gets up in here. So we'll just keep an eye on this to see if this is going to get above it. And if it does, how aggressively will it get above it? It may not. It may just stall right here and not get above this resistance. But keep that in mind that, getting above 46.31 is still possible. All right, let's look at the daily. Right, so here in the daily, clearly divergence going on, the SMI pointing down. We've, just look at this consolidation going on. I've been saying it all week that we were going to get into a period of consolidation with some pullbacks mixed in. Yesterday was obviously a pretty decent pullback day. Today, basically, most of it was recovered and rebound here. But the SMI continues to show the market probably decline. But it really hasn't declined. It's just tracking sideways through this consolidation phase here. And I think the big one for me, as far as cycles, especially on the daily chart here, is August 21. Because that has been. Let me just kind of zoom out a little bit so we can get a little bit better look at these cycles. What I want to focus on is the yellow cycles here. If you look at these yellow cycles going all the way back here, let me just move a little bit more to the left. These yellow cycles, to me, they've been really, really good. This one right here, and it comes all the way over, and then we get another decline there. You get this yellow cycle here. You get this drop into here. And you get another yellow cycle here. And this one wasn't really that big, but it was a little bit right here. It came down in. I'm not so much worried about the depth of the decline because we're in a very bullish phase here since March, So I'm not too worried about how big the declines are, even though we've had some big ones in here. I'm more just concerned about the cyclicality. Does it show up? Again, it shows up right here. So every single time these yellow cycles have shown up. So that's why I think this August 21st cycle is probably, at least still for the moment, is I think the most reliable cycle we got going on. So the third week of August to me looks like there's a potential for a decline here. There's August 10th here, there's August 13th, and the August 13th one does kind of line up with the weekly. But for me, the third week of August looks like the one where I think we could potentially see a pullback here. So between now and then, can the price get up into here? Yeah, it could go above this 46.31. It could get up into there before it does any kind of pullback. But we'll just see about this pullback. How deep is it going to be? It's just going to be kind of moderate. As far as support goes, to me, this is really the nearest support. Right, is that one, which is 44.11. If you really want to talk about, there's a tiny bit of support. Let me just zoom back in now that we've looked at those cycles. Let's zoom back in here. To me, if you want to talk about support, if and when this thing begins to decline, there's a little bit right here, not much, but there is a little something right there. That'd be about 45.28. So, whatever. 80, 90 point drop to get down to there from where we're at right now. But below that, there's nothing else really going on. And the next support is down here. This would be your next support. And that to me is 44.11. So those are the two numbers. For me, the natural support points are 45.31 and 44.39. So we'll just see what happens with this pullback coming into August 21st. I think we could get down to this 45.39. What is that? Yeah, 44.11. Yeah, I think it's possible. That's 200 points. Yeah, I think it's possible it could come down that far. Okay, let's look at the trade of the day. So here we are on the 5-minute chart, and 2 trades of the day. I mean, you could have taken one if you happen to be up super early pre-market. This was about 4:45 maybe. Let's see. Yeah, 4:45 this morning here Texas time. That would be a really good entry actually. And this is just so. I mean, I talk about this all the time. And for those that are paying attention, especially the paying members, you really want to pay attention to this. But this was 4:45 this morning. I know people are working jobs and raising families and doing whatever they got to do, and not everybody can get up at this time. But if you happen to be up at that hour, and we're going to talk about another trade of the day over here in a moment, but this 4:45 a.m. one, this was so perfect, because the reason I say that is because you're just waiting for this to roll over. Okay, right up in here on the SMI. You can see the MACD is in positive territory, right? It's above this purple line. So it's positive momentum. That's again, did you really got to pay attention to what side is the MACD on? Is it above the zero line, below it? Here it's above it. That's great. We want to always be mindful of that, because now we wait for this we don't trade this pullback, is the point I'm trying to make here. When you see the MACD is above the zero line like this, especially with a little bit of gap going on here, right? Okay, I can stretch that out a little bit. Let's just stretch it out a little bit. Okay, and kind of overdo it. See, I got this little gap going on right here inside the MACD. It's above the purple zero line. You got a gap going on, so you get the Giddis plus indicator. You don't trade it to the short side in this situation because you're in positive territory, right? Don't take the risk. It's kind of silly to do that. Just wait for it to roll over. It could have gone, like, let's say, just only came down halfway and went up. That's when you take the trade, when it curls up right there. In this case, it came all the way down. That's fine too, and it curled up. When it curled up right in this area, you take the trade. So somewhere right in here. And what a thing of beauty, right? You just ride this puppy all the way out. Look at this. You get a little hiccup right here. You got a choice. You could close it, stay in. The MACD just keeps on going. Okay, and just kept on riding it. This one right here would have been probably pretty hard to stay in as soon as you get like a third of the way down this candlestick. Maybe even these two right here might have been an exit. Okay. But you're making good 5-10 points at least at the beginning phase of this run up on the SMI. Yeah. This is the most reliable phase, by the way, right? So you get this 5 or 10 points in here pretty easy. Again, depending on your account size, that might be as small as $50. That might be $2,500. It just depends on your account size and how big of a position you're going to take. One thing I want to mention really quick is we're looking at the trade of the day here for the members is you want to make sure your position size is appropriate for your account size. And forget all this crazy all-in trade stuff. You just got to get away from that kind of trading. Now, I was talking to some members today on the Discord server, and I was saying people don't realize, especially young traders, don't realize the importance of building up your account over time and just grow that account. It's really important to do that. Because think about it. On a small account, if you want to make $100, you got to take, if you have a small account, you have to take a larger position in proportion to your account size to make that $100. Does that make sense? But if you have a large account, all right, you could take a position that's only a small percentage of your account, and the market only has to move a tiny bit to make $100. So let's just assume for a second that you're trading the micro futures. Okay, I know a lot of my members trade options, but I'm just giving an example. Okay, maybe you only trade a few contracts on options or one contract on the futures, the micro ES, because let's say it's the only thing you can do with your account size. That's completely different than trading the ES, which is the E-mini, much bigger. It's 10 times the size of the contract, right? This is 10 times the size of this contract over here, right? So to make $100 on MES, the market has to move more to make that $100. You have to wait for larger movements, either up or down. Follow me? But when your account's larger and you can afford to take on, let's say you're only doing 2 of these contracts, but when your account gets big, you're taking only 1 of these contracts. That's the equivalent to 10 of these, right? It'd be the equivalent to 10 of these, right? It's equivalent to 10 of these contracts. Now the market only has to move a little bit for you to make $100. It only has to move a few ticks, and you're up $100. So I'm really trying to make here with all the members, especially the members and those that want to become members, is you want to focus on increasing your account size. Okay, not all in trades. You don't want to be taking, if your account size is $5,000, you don't want to be taking $4,000 worth of trades. You don't want to open a position that's $4,000. That's craziness. That's 4/5 of your account size. If you're wrong, even just a little bit, you're going to bust your account and you're going to be back down to zero, starting all over again. And I know a lot of you shaking your heads right now, privately in your own homes, going, how many times I've been through that? Well, stop doing that. Stop doing these crazy all-in trades and oversized positions. That's craziness. You'll just trade, a fraction of your account size. Be happy with that $50 or that $75 or that $100. If your account's much larger, then fine. Be happy with the $1,000 instead of $5,000. Whatever it is, okay. But don't oversize your positions and start blowing up your account and having to start at scratch all the time. That's nuts. And then not trading for weeks or months so you save up more money. Okay, don't do that nonsense. Just take small positions and incrementally increase your account size until you get to the place where you can trade bigger contracts, and smaller movements are going to be the way to, trust me, when you get into your 40s and 50s and 60 years old, okay, you want to be able to just have some corporate bonds, turn in a bunch of interest, and you don't have to worry about retirement, okay? You don't want to get to be an older person and you're still freaking out how you're going to retire. Okay, so be smart. All right, so that's one trade of the day, and I'm just going to finish up the video with this. This was the other trade of the day, and really obvious, right? This was at 12:30 this afternoon, my time here in Texas, which was about, let's see, where did it happen? Happened right there, about the 4th red candlestick from the bottom. So 1, 2, 3, 4, this one. Okay. Now you can see at this point, if we just draw straight down, what's going on here? You can see the MACD. Let me just kind of get the MACD back into reasonable frame here. You can see the MACD's got this huge gap and it's going what? It's going down, right? So you got to be careful. This is going down, right? You got to be you can't ignore this. It's like this huge gap going on inside the MACD. That means it's aggressively going down. And the other thing you gotta pay attention to here is that the SMI has not curled up, right? It hasn't had one good candlestick or even 2 of sustained staying power going up. You follow me? So that's how I would have traded this. I would have waited on this. I would have waited for this to finish, and then over here at what time was it? About 12:50. I'd wait for in fact I'd wait for this entire candlestick to be done. Okay, you wait till it's done, completely closed. It's big fat green candlestick. It looks great. At that point, you're okay. Let me clear the screen. At that point, you're about right here. Okay, the SMI is curling up. It looks good. You got a big fat green candlestick. Go long right at the close of this or the open of the next one. And guess what? You pick up these 3 candlesticks. And that's about 5, maybe another 2, 3 points in there. Let's just call it maybe 6 or 7 points worth of trading in there. Maybe a little bit more because I got above the 46.05. Maybe about 8 points worth of trading. Okay, really, really nice. Okay, that's nice money right there. Right, maybe 2 or 3 contracts on your micro futures. Maybe you're trading options. If you got a large enough account, you're trading maybe some ES contracts or options on the SPX. Whatever you're doing, there was money to be made right here. Really nice, okay? So that's how you take advantage of the trades of the day, all right? This, by the way, I know this is really early pre-market over here, but a lot of times it'll happen like between 6 and 7:30 kind of in this area. Today it happened much earlier, all right? But there's a lot of opportunity within a few hours from like 2 to 3, 4, like 2 or 3 hours before market. Maybe this one happened, like I said, happened a lot earlier. A good whatever it was here, 3 or 4 hours before the market opened up. But take advantage of those pre-market opportunities because it happens a lot, right? This from 4 o'clock to like 7 a.m. my time, you get a lot of pre-market opportunities to enter, and you'll get these GITIS Plus indicators. You just gotta be a little patient. Sometimes let them mature, jump in the trade, bam, making money. Hey, and sometimes it might have been the market might have been up here, and you get the GITIS alert, kind of like what we had over here, whatever, and it might be going down instead of up, right? That's the beauty. Well, and I'm just going to finish up with saying this: options traders, you know what you're doing. If you're keeping things super simple, obviously this is going to be a call. If it was up here going the other way, it'd be a put, right? And there's other option strategies if you want to be kind of hedge against the market moving against you. Then and I suggest looking into those other option strategies, not just straight up puts and calls, though it may cost you a little bit more upfront to do that. Okay. And the other thing is for futures traders like myself, because I trade mostly futures, for us it's easy peasy. Long shorts all the same margin. So again, just want to finish up the video today by saying, make sure that you don't oversize your positions for your account size. And for crying out loud, make sure you have risk management in place. At bare minimum, you're going to have some type of trailing stop put in there, a stop loss, maybe some type of counter position that you have ready, a strategy to deal with if the market moves against you, right? You really got to think about those things, and don't do these all-in trades and you're just swinging for the fences. That's craziness. Listen, if you want to join the membership, I'm going to keep this super simple. Just click on the link that's in the comment section. It'll be the top comment. Make sure you read that comment in full because it's going to tell you how to join properly. Join the Discord server. All the services take place on there. I put out nightly emails for the S&P 500 with a few comments. You get the streaming charts. You saw here, this is the 5-minute, but there's 5-minute, 15-minute, 1 hour. Okay, there's all kinds of things on the Discord server that you can really take advantage of. That's where all the membership services take place. So if you want to join, click on the link, come on over to the Discord server. Okay, everybody, hope everybody had a very profitable week. Happy trading, everybody. God bless everybody. Okay, we'll talk to you all real soon again next time.